Welcome to the Home Building Hub, your essential podcast guide to building your new home. Hosted by industry experts Colin Bischoff and Darren Brennan, this conversational podcast will help better educate you about all things new home building so you can avoid costly mistakes and enjoy your building experience to the fullest, no matter which home builder you choose.
G'day folks and welcome to the Home Building Hub. You're here with Colin as always and Darren, co-host. Welcome Daz. We've got a very special guest today and very excited. It's someone we've known for a long time. How are you feeling first of all, Daz? Give us a bit of an insight.
Going well. It's I'm wrapped to have our special guest on today. I think just given where the market's at the moment and some of the challenges that are out there for people, I think Steve's going to bring some huge value. So, mate, I might let you do the intro and, give us a bit of a rundown on Steve and all of his accomplishments, I guess, and maybe he might give us a bit more on that later. But, mate, over to you.
Beautiful. So for everyone listening, for everyone watching, current climate, people are a bit confused what to do finance-wise. Do I go and buy, whether established or build a new home? It's a fair bit of confidence is probably the main word, Daz. People lack confidence through the last 12 months for sure, but it seems to be building up slightly. So we thought now would be a good time after we've knocked over a few episodes in 2024. We've got rid of the cobwebs. We're ready for a really amazing guest. So Steve Matsoukas is our guest, everyone. He's the director of a company called Loan Gallery. And Steve has 22 years of experience in this industry and just a cool $3 billion, that's B, Daz, B? Yeah, $3 billion in existing home loans. That sort of spans across around 8,000 clients or so. So it's become a massive business for him. And he's a really nice guy, but a great expert in this new home construction space. And we thought might be really good to have Steve share some of the topics as follows, like overcoming savings challenges, setting yourself up for success, government incentives. We'll talk about the current climate and how it looks in the coming 12 months. And probably the ultimate question, is now a good time to buy as well? So if you want to get to know us guys a little bit more, we don't really ramble on about ourselves too much. So jump back to episode number 1. You'll learn about me, you'll learn about Darren and what we're doing the podcast for. Other than that, Daz, is there a fee for the podcast?
Mate, absolutely. If you're enjoying the podcast, please share it with friends. We're seeing our uptake improve every week. So, we'd really appreciate that. You're enjoying it. One friend, send it their way. Also, if you can leave us a 5-star review, that'd be doing us wonders. And away we go, mate. We're in.
Yep. So, Steve, I'll stop here. We'll welcome you to the Home Building Hub and please say g'day and share a little bit of background and give the listeners and the viewers a bit of an insight into who you are.
Colin and Darren, thank you very much. You're very generous in your introduction. As you can tell from my face and the grey hairs on it, I've been doing this for a while. I started with Aussie, actually. I get self-conscious about the grey after a while. Sorry about that. I started with Aussie just over 20 years ago. I have a passion for house and land. I've always loved a new home and how it looks and how it feels and how it smells when you walk in for the first time. And that's really driven the direction of our business. We're very big in the house and land space. We have a team that's specialists in construction. And precisely because we've been doing it for so long, we've been around for so long, we've made a conscious effort to design our process such that it can help more people get into their home and overcome the issues they have around confidence and fear and all these sorts of things, all the human psychology aspect of the things that are holding people back. So our process is designed to help people walk that first step towards getting into a brand new home.
That's awesome, Steve. Tell us, Steve, a bit about, obviously you can walk into your bank and we hear it a lot, through the display centres where I'm already dealing with a bank, but there's obviously some really distinct benefits of using a broker.Maybe give us a bit of a lineup on what some of those might be for the listeners.
I think there is, and I think if I was to just summarise it in one word, it would be knowledge. So we do this every day of the week. This is all we do. We don't do a little bit of home loan lending, a little bit of personal lending, a little bit of car lending. We just do home loans for house and land packages. So off the back of that, we've become specialists and very knowledgeable in exactly what's involved in the process across a number of different lenders to help people get into their home. So that knowledge aspect is huge. So for us specifically, it means that we understand in the greenfield space, we understand the opportunities available to first homeowners through the first homeowners grant. We understand the opportunities available to various purchasers with a home guarantee scheme. So then the home guarantee scheme is quite an interesting one, because when it was originally introduced or released by the federal government, it was specifically for Australian citizens buying their first home. It's subsequently been expanded significantly. So now it covers citizens and permanent residents. It covers people who are buying their first home. It also covers people who have owned a home in the past, provided they haven't owned property in the last decade. So these are the little nuances that we're across every day of the week. And we're also finding that these are the nuances that the average person in the street who's having a look at a package isn't aware of. So we spend a lot of our time. Sorry, go on.
I was going to say, do you think that using a broker generally will save people money, time, these things that are important to them, and is there any fee for the service of using a broker? I think a lot of people maybe get fearful that, it's going to actually cost me more. What am I going to go to there?
So that we don't charge. It's that simple. The lender that our clients choose pays us. There's no fee to our clients. That's the first point. The second point is that we negotiate better pricing for our clients than you get direct from a branch. We actually have a program that runs in the background for our existing clients, where we automatically reprice their home loans every 6 months to make sure that they're on the best rate possible without our clients having to do a thing. So we'll save you money on the front end. We're aware of all the schemes and grants and programs that are available. We don't charge you for what we do. We get paid by the lender. So we do the work for you. The lender pays us on your behalf. So you'll get a better rate, a better product, a better set of circumstances to get into your home. Costs you nothing, and you get all our knowledge and experience at no charge to you.
It's kind of like you're employed by all the banks in some way.
Pretty much.
Which is great.
Well, actually, we play one off against the other, so it becomes, if your mindset's like mine and you like negotiating, you like a bit of a haggle, it actually becomes quite fun, because you go, well, I've got this much over here and I've got that price over there and that price over there, and by the way, this one will do an LMI waiver. What are you offering? Yeah. So for someone like me who loves haggling, right, it's a great industry. It's great to be able to help people off the back of that.
Yeah. For the listeners, I guess it's important to highlight that a broker's there to advocate for you. So in the model, in the business I work for, we actually use the broker model, but for new homes. So we essentially use what you guys do as a really good example and say, if you go to one bank, you're going to get the options from one bank. If you go to one broker, you're going to get options across multiple lenders, and better still, you're going to get, I guess, more of an option that suits you, because everyone's different. Yeah, everyone's got different jobs, different circumstances, and whatnot. And I guess the key for a broker, and particularly, I know, Steve, you do that all day, every day, is really trying to find a solution that suits that individual or that couple or whoever's applying for that loan and their circumstances. So I think that's the real key to understanding why you choose a broker over a bank, in my eyes anyway. Yeah,
absolutely. You personalize the solution to the circumstances of the client every day of the week. So the knowledge, personalization, the pricing, the whole lot coming together in one parcel that is the best possible fit for that particular client's circumstances. And as you said, everyone's a little bit different. No one's the same. There are similarities, but everyone has their own particular circumstances. Yeah. So it's no good saying you got one size fits all, which is what happens when you walk into a branch. So you go to any of the big four branches and say, well, this is what we have, like it or lump it, you've got to fit that. The reality is, in the same way that you work, Colin, we say, well, we understand where you stand. Let's find a lender that will accommodate your circumstances, not you accommodating the lender.
Yep. So anyone out there who's, sorry, Daz, just struggling a little bit, that got a rejection from a bank or whatnot, there's every chance going to a broker may actually help you, because I've seen that time and time again where they got a no and they go to a broker who's a little bit more creative, who knows a few more lending options and how to package that up, so to speak, and they actually come through with the finance for you. So it's definitely worth looking at. Sorry, Daz?
I was just going to say, the other bit I find is, like, the brokers that I've used over the years, they're actually they've become friends. I don't know a soul at the bank. I've had Commonwealth Bank account forever, and I don't know a single person who works at the CBA. Whereas, Steve, you've done loans for me previously, etc. So I feel like I'm dealing with a friend when I'm dealing with a broker, and I think that also gives you comfort, your best interest at heart. So it's interesting sort of looking at it that way too, I think.
We're helping people walk through one of the biggest financial decisions of their lives. For most people, buying their home is the biggest financial decision they'll make. People don't want a standardized service. They don't want a standard off-the-shelf product. What they want is something that's personalized to them and their families, and that's what we do. And then, as you say, Darren, over time, you build up a personal relationship with people. And generally speaking, most brokers do care passionately and intensely about the welfare and the outcomes for their clients. So you put all that together, and all of a sudden, you've got in your broker, you've got someone who will walk the journey with you and make sure that they do everything they can to get the best possible outcome for you.
So, what I guess what would be one of the biggest challenges would be around people saving a deposit. So, could you share a little bit of insight into how people can prepare for that and get themselves in the right position to get a loan? Share a bit on that, please.
Absolutely. So I guess the starting point is determining how much you actually need to save. Because depending on who you ask and depending on what you're looking to buy, it can vary. Now, the reality is, for most people, they need a bare minimum of 5%. So 5% means 5% of their purchase price. Irrespective of which lender you use, they'll all ask that you save that 5% in one form or another. Now, it could be cash in the bank. It could be some shares that you bought a few years ago that you're happy to cash in. It could come from a number of sources, but you need that 5% as a bare minimum. Again, depending on what you're looking to buy, but in our context, for a house and land package, you need 5%. So understanding that that's your starting point, and that's really your ultimate goal when it comes to saving your deposit. But then once you've determined what your 5% looks like, then your next step is, well, it's a big, hairy goal, something difficult to achieve. So what do you do psychologically to actually prepare yourself to get there? So like most things, you break down into small, easily digestible bites. So you say, all right, well, I need to save X amount. So if you're looking at an $800,000 package, 5%, $40,000. Yeah. So you might say, all right, I want $40,000 over the next 18 months. What does that look like? Well, the next 24 months, whatever your time frame is. Well, how do I get there? So you break it up into smaller sections. You say, all right, well, 25% of 40,000 is 10. Let's set that as the first goal. So you sit down and you say, all right, I need to get to 10,000. How do I get to 10? Well, your starting point, not your starting point, but your next step from there is understanding your own personal finances. So most of us have got accounts with 2, 3, 4 different institutions. So you might have an ING account, a Commonwealth Bank account, an ANZ, a NAB, whatever. And quite often it's quite difficult to aggregate all that information into the one spot so that you've got, in effect, a dashboard view to see exactly where you stand. What you'll find is that by sitting down to prepare a budget, you'll actually get all that information to the one spot and you have better insights into where your money's going. Now, when it comes to budgeting, there's a number of ways that you can do it. There's the old-fashioned way of getting a bit of paper and a pen and just writing everything down, which can be quite difficult and time-consuming. But there's more and more online tools that are becoming available through what they call personal finance managers, or PFMs, where you can actually use open banking and the consumer data right to aggregate all your data across multiple institutions into the one place, so that you might have your ING accounts coming into the one spot, your ANZ accounts coming into the same spot, all your other institutional accounts coming into that one spot. And off the back of having all those accounts in the one spot, you can then use the tools that are associated with your personal finance manager to start working out your budgets. And the importance of the budgets is that it gives you insight into where your money's going. So a lot of us, particularly today where everything is tap and go, when I was younger, you actually needed cash in your wallet. Today, you just need a little card. Now, whether you're buying, a $5 coffee or a $200 jumper, you tap your card, off you go. You're not really conscious of your spending decisions. So understanding where your money, through using the budget so that you understand where your money's going and where you're spending it, gives you better insights. And then off the back of those insights, you can actually sit back and say, well, you know what, maybe I can make better informed choices. So once you've done all of that, so you know what you're aiming for ultimately, you've done your budget, you understand where your money's going, you understand where you can get better value for the money that you're spending. Then you can start setting up your micro goals. So if you know that your end result is, or your end goal is $40,000, and you go, you know what, I'm going to split it up into 3 or 4 different stages. So I'll go for 25% as my first goal, 50 as my second, 75 as my third, and the 100% as my fourth. How do I get to 10? And it could be as simple as, you know what, I get paid fortnightly. I'm going to put 500 a fortnight into a separate account that I know that I won't touch. And you start building a deposit in that manner. But I think the important thing is to break it, to understand where you're spending your money, to understand where you're wasting your money, because let's be honest, we all waste a decent chunk of our own money. And then stopping the waste and using that as your savings to build your savings in using that to build your savings for your home.
Yep.
So bite-sized chunks.
I guess, Steve, it sounds like, working with your broker, it's a bit more of a journey these days when you're trying to get to a deposit. It's not like they just roll up to you and say, by the way, I've got 5% deposit, let's go. A lot of people, you guys are, I guess, coaching and mentoring through that and using the open banking sort of setup to help gather all that information. Would you say that's a big part of your role these days?
The absolute minority of the people that we help get into a home have a full 5% saved on day one.
Yeah, well.
And when I say the absolute minority, for us specifically, it would be less than 10% of the clients that we ultimately write a home loan for who have their full 5% on day one.
Yeah.
So around 90% of the people that we, as I said earlier, we walk the journey with them. So we know where they are today. We get a deep understanding of where they are today. We know where they want to end up. And then we use the intervening period to help them understand what they need to do and when they need to do it by, so that by the time they get to the end point, they're actually ready to go. And that journey is, and I do call it a journey. I've been calling it a journey for a while because to the point that you made earlier, Darren, you do form a relationship with people as you're walking through this journey with them, because you're helping them understand what's going on at the different points in time and what they need to do and when they need to do things by. And off the back of that, you do build more than just you're a customer, I'm a vendor relationship. It does become a relationship where you become, to a degree, friends, and they rely on you for guidance and advice. And that's a big part of what we do, that knowledge piece that I mentioned earlier on.
I think also, Steve, you must then guide them somewhat through the building journey itself as well, because, you're often buying land, or in this market, there's plenty of titled land out there, which is great. But if someone isn't quite in a financial position to be able to proceed and have a full 5% available, for example, you might be guiding them to say, look, go and find an untitled block that's 12 months, 18 months, 2 years away, put a deposit down on that, and then we'll help you and guide you in that savings process, whilst you've actually, you've got the, your footprint on that block, that, we can help you through that process, I guess, which is a great part of what this industry allows and the established industry doesn't. It's for sale today, and if you can't settle it in a time frame that suits the vendor, then good luck, you miss out, right? Whereas with our space, you can often lock something in and work with the broker to get yourself in that financial position.
100%. So most of what we do is, for most of the clients that we work with are buying untitled land. Yeah. So off the back of that gives us the time aspect that we need to help them get into the right position for them to successfully complete their purchase. So, if you've got, and then the related part to that is that they're buying land at today's price and then settling at tomorrow's. So there is an opportunity in some instances for them to get a bit of an uplift in equity as time elapses while they're waiting for their titles. And we've seen a lot of that, particularly in the last decade. But having the opportunity to work with people while they're waiting for their titles to be ready, while they're waiting for the developer to actually complete their block, it gives people the opportunity to say, all right, well, I may not be quite right today. That's okay. Yeah. What it does mean, though, is that we've got 12 months to make sure that you are right. So let's make sure we don't waste those 12 months. Let's use those 12 months productively to do everything we can to get you in as good a position as you can get into, so that you successfully complete your purchase, you borrow as little as you have to, and you're not too worried about what happens, because along the way, we're going to be walking the journey with you and ensuring that whatever comes up, we'll deal with it together. You'll never be on your own. And then even going on from there, during the construction of the home, So we do the progress payments for all of our clients, or for most of our clients. Now, people are often quite uncertain around, what can't I do and say during the construction process. So we're there to help guide them through that particular portion of their journey as well. So people will say, oh well, something's not this, something's not that. Okay, that's fine. Let's process the payment and let's deal with it directly with the builder. So a lot of people just aren't sure what their rights are or what they can and can't do while their home's being built, and we help them with that as well.
Yeah. No, it's good. I always describe it to a client as it's actually a team.
Yes.
So the broker, conveyancer, a land agent, if you're buying directly off a land estate, and of course your new home sales consultant. Like generally, you're going to deal with all four of those. And the way we like it in our industry, we like to control that process to make sure someone is dealing with a broker that knows new home construction, that someone's dealing with an estate and a land agent that's not just about the block, but we're looking at the site cost of that block, and we're looking about the potential of that land titling on time. Now, for those who are new to this, titled means you can go and build on the thing now. Untitled simply means that, essentially calling it a pre-sale, that the developer's selling that land to you today at the price they're advertising, and you can pay a deposit and sign a contract, but it's not ready to build on. It's not yet developed. Could be 6 months away, could be 12, could be more. Now, one thing that we like to do in general in our industry is it's important to come to someone in a display home or in a business like ours, just a new home sales consultant, because they will tell you a little bit more detail about that block before you go and take that plunge. Okay, so some of the things on the other side of this is the risk factor of, well, what if it doesn't title in 12 months? So sticking with those developers that are perhaps, a bit more reputable or got some more runs on the board is safer to do that. They may be priced slightly more as a result, but you're talking about maybe the Stockland developments or Villawood developments, etc. There's a bit more, it's a bit safer to do that. I'm not going to discredit the smaller developers or mid-sized developers. It's just the other guys have a longer, I guess, history with that. So there's all these other things. Just to clarify, people listening who are brand new to this, it's actually a great solution to go and get an untitled block and get your broker to help you save in the meantime before that's ready to actually settle on, and then you can have the money to build the home. So all that can be priced now, but paid for later, essentially, and delivered later. Yeah. So good explanation, Steve. Thank you. What was the next one there? I was going to talk a little bit about government incentives. You touched on that a little bit earlier. Is there a couple you want to talk about that people are really utilising at the moment?
I think I do want to raise one that I think is particularly underutilised, and that's the guarantee scheme. The home guarantee scheme, there's various iterations of it. So, and what it does in effect is, if you've saved your 5%, bearing in mind that every lender in the country requires you to have that 5% somewhere. So if you've got your 5%, we can tap into the guarantee scheme and get you a guarantee from the federal government for 15%, which means that now it's not a cash advance; it's a guarantee. Yeah. So what it means, and the important part of this whole process for applicants, is that for every lender where we can get you a guarantee scheme slot, there's different assessment criteria depending on what's called the LVR, or the loan to value ratio. So if you approach a bank just with your 5%, you're in lender's mortgage insurance territory, and the assessment is much harsher. If we go to the bank and you've got your 5% and we've got a guarantee scheme slot, from the lender's perspective, there's no lender's mortgage insurance, and it's a much easier assessment and it's much better pricing for you. Unfortunately, not enough people know about the guarantee scheme. It's a magnificent, wonderful opportunity for people to have the minimum deposit of 5%, get a 95% home loan with no lender's mortgage insurance, and walk into their home, their first home, or even a subsequent home, assuming you haven't owned property in the last decade, with as little as possible, and be assessed using the easiest criteria that lenders have for assessing a home loan application, and then off the back of that, getting the best pricing as well. I think there's not enough noise has been made about it, not enough noise has been made around, or not enough information has been put out into the public domain around who qualifies and who doesn't, what you can and can't do when you've got the guarantee scheme slots, and the benefits that are available to people using these programs. We had one just recently, well, yesterday in fact, where a client had been to somewhere else. They hadn't tapped into the guarantee scheme. They came to us. we had a discussion with them. We're actually redoing their home loan application at the minute, and we're doing it through the guarantee scheme. The upshot of for this client is that they're going to save somewhere in the vicinity of $24,000 in lender's mortgage insurance. Now, banks are banks, and they're a necessary part of the process and an integral part of the process for us. But I really don't think we should be paying $24,000 extra, right? I don't think they need the money. So for this client, and they had no idea about the guarantee scheme. No one, their broker hadn't discussed it with them. It must have been a relatively new broker, and that's fine. People learn throughout their work lives. But for this client specifically, the saving was just over $24,000 just by restructuring the application a little bit. So that's how much of a difference it can make to the average person. And $24,000, that's a lot of money. That's a lot of money that ultimately they won't need to pay. So that's why the guarantee scheme, 100%, because it was a lender's mortgage insurance fee, it was added into the loan. They'd be paying interest on it for 30 years. They'll end up paying two and a bit times what they borrowed on day one. That's a massive saving to them. And then that 24, we're using that to drop their loan amount. So off the back of that, they're not paying the $24,000, not paying interest on $24,000 for 30 years. They're borrowing less, which is again a benefit. So all these things come together, and they're only possible because of the guarantee scheme that nobody had ever discussed with them. Over and above that, you've still got your first home owners grant. So it's currently $10,000. And the first home owners, when we couple the first home owners grant with the home guarantee scheme, the first home owners grant becomes surplus to the actual transaction. In simple terms, what that means is that you don't actually need it to settle your house and land package. So then you've got a decision to make as an applicant. Do you want to use the $10,000 from the first home owners grant to drop your loan amount, or do you want to use the $10,000 from the first home owners grant as cash that comes to you once you've got the keys to your home to help you finish off setting up your home? So you might need some new furniture or a few bits and bobs for inside. But ultimately, it puts the power back in the hands of the client to say, well, I can now decide what I want to do with this. Right? I'm not being forced to do something particular because of lending requirements. So I think they're the two biggies at the minute. And I think that it's really important that more and more people understand that using the two together, or even using one on its own, the guarantee scheme can make a huge difference ultimately to the outcomes that people achieve through their lending.
Could you touch on the qualifications for each, just loosely?
So the first home owners grant, building a new home in Victoria. It's that simple. So everything that the three of us do every day of the week, right? If you're doing it for the first time, then you'll qualify. Now, the home guarantee scheme, there is some qualification criteria. So basically, if it's a couple that's applying, the household income can't be greater than $200,000. If it's a single, their income can't be greater than $125,000 in the previous financial year. Yeah, and then part of the program is that we get the notice of assessment for the previous financial year to confirm that you hadn't crossed the threshold. That's not to say the income in the current financial year can't be higher. So we've had instances where last financial year a single applicant might have earned to 123, and that's what's on their notice of assessment. Their current income might be 135. So they'll qualify for the higher lending because of the current income, but they qualify for the program because the notice of assessment had them under the cutoff threshold. So we play around with stuff like that. But generally speaking, 125 for singles, 200 for couples. That's about it. There's various iterations of the guarantee scheme. So the single parent guarantee scheme where you only need a 2% deposit. But the reality is there's no lenders in the country who will, unfortunately, there's no lenders in the country who will pick up on that program. So that's really, for all intents and purposes, just parked to the side. But for most people, if you're a first homeowner or if you're buying your second home, provided you haven't owned property in the last decade. So we deal with a lot of people who are onto their second relationship. For whatever reason, the first one hasn't worked out. They've done whatever they've needed to do. They've found someone else. They're re-establishing their lives. So they might have owned property the first time, and now they're trying to buy a property for their new family, their blended family. Provided these people haven't owned property in the last decade, then they qualify for the guarantee scheme as well, and they'll be eligible to save that lender's mortgage insurance fee as well. So it's not just first home owners. There is opportunity for subsequent property owners to actually tap into the schemes, assuming that they qualify.
Yeah, it's good, isn't it? Like, it just gives them a real leg up.
100%. And you know, credit where it's due to the federal government. The idea is to get families into their homes. So it's a fact of life that, you know, I don't know, 60, 70, my parents have been together for the best part of 6 decades, just over 6 decades. it's unlikely that the overwhelming majority of couples today will be in the same position. People split up. So giving people who are reforming families and in effect having a second chance of being happy, giving them an opportunity to get into a family home, I think is massive, absolutely massive. And credit where it's due. It's a great step in that direction, and it can certainly help. And we've certainly helped a lot of people use that qualifying criteria to re-establish themselves and get their second families or the blended families up and running again. It's magnificent.
That's good. Excellent, Steve. Hey, tell me, pardon me, looking forward, how do you see the next 12 months from a finance point of view? You know, I must say I was disappointed when the Reserve Bank met last, and I was sort of hoping they'd say, look, interest rates might be going down next, but they hedged their bets and said they could equally go up, and everyone panicked a bit more. So I guess the big question out there is, on the back of that, where's the next 12 months heading, do you see, from, the intel that you guys gather, and obviously you're really close to that. And, I guess, is now the time to buy? What are your thoughts there?
So there's a couple of pieces there. I think that it's fairly safe to assume that the current cash rate increasing cycle has peaked. It's not going to go any further. I think from here on, given what we're seeing in the economic data, the likelihood is that the next move will be down. I think the RBA has been under a lot of pressure, and they've done some pretty radical stuff or pretty extreme stuff to try and combat post-pandemic inflation. And I think we're past the worst of that right now. And we're seeing that in the hard data. So you're seeing inflation dropping, you're seeing inflation trending down, you're seeing unemployment starting to trend up a little bit. I know that sounds counterintuitive. Unemployment's going up, therefore things are good. It's the market was the labour market was too tight. It was that simple. Now with the borders opening up again, people coming into the country again, things are trending back to normal, which I guess is the important part, the important takeout for most of us. Off the back of things trending back to normal, then the RBA has scope and latitude to actually start adjusting the cash rate again. I think the next movement will be down. I think probably over the next 12 to 18 months, it'll be down somewhere between 0.5% and 1%. So the longer we have the RBA meeting and doing nothing, the more confidence it builds in people. Right? So certainly the no activity restores people's confidence every month. And I think off the back of the fact that most of the commentators that we're seeing now are saying the next movement is down, probably the first one probably around September, the second one probably around November. Now, don't quote me, no one's got a crystal ball, but roughly September, roughly November for the second one. I think there'll be a pause over Christmas. So it will be in the second half of this year. There'll be a pause over Christmas, and I think they'll do some further adjustments sort of around the May next year, May, June next year. So the Reserve Bank doesn't meet every month anymore. So prior to this year, it was meeting 11 months out of 12 from February to December. As of this year, they meet in February, March, they skip April, May, June, skip July, August, September, skip October, November, December. So there's 8 meetings in effect a year instead of the normal 11. They've taken 3 out. Just to suppress some of the noise that always exists around an RBA board meeting. But I think the future's looking pretty good. Off the back of that, now we've got a number of factors at play here. It's not just the interest rate and the interest rate environment. We're basically paused when it comes to interest rates at the minute. And the outlook is that the cash rate will drop. And the importance of the cash rate, I think, is that, and a lot of people don't understand this, but the RBA cash rate is the benchmark rate that all other interest rates are priced off. So if you want to get an indication of roughly where your home loan should be, you take the RBA cash rate, add 2%, and that's roughly where the variable rate on your home loan will be. Business loans are the cash rate plus a margin. Commercial loans are the cash rate plus a margin, generally 3 or 4%. So the higher the perception of risk, the bigger the margin over the cash rate. So the RBA cash rate is crucial. But as long as it doesn't move, it builds confidence in people, and it's obviously looking like the RBA will leave it alone. Off the back of that, as people's confidence increases, then they start making those decisions to move forward and finalise their purchases. At the same time, you've got all these other external factors that are feeding into property specifically. So you look at things like immigration. Immigration is at record levels. It's tapered off a little bit, but still running extraordinarily hot. You've got a property market or a rental market that's red hot at the minute. It's difficult to find a rental, and when you do find it, you're paying over. You'll pay what you consider to be over the odds for that property in rent. So you put people coming in, new homes not being built at the pace that Australia requires, rents going up, interest rates looking good. You put all that together, and the future's looking extraordinarily good for property owners. Absolutely.
Yeah, indeed. It's certainly it's certainly been challenging for a lot of people, Steve, as they've seen their interest rates. I mean, we talk about 13 interest rate rises, but I actually probably qualify that as 17 because there were four in a row that were 0.5% rises. So it was significant, change to people's lifestyles because of that, and they've had to knuckle down and work out ways to survive their way through that. But what I'm not hearing is a lot of foreclosures either. A lot of people having. I mean, yes, some people have had to sell, but it's not like you're walking down the street and every house is for sale and it's panic station. So it's been.
This is the thing, Darren. Sorry to cut you off, but it's one of the frustrations that I've had in the last 18 months. Every time you pick up a newspaper and listen to a news story somewhere, it's like the mortgage cliff, the end of the world's coming. The reality is none of that happened, right? Mortgage defaults are sitting basically where they were 2 years ago. The other side of it is that for a lot of people coming into the property market, they'd never actually experienced an interest rate increase. Because if you look at the 3 or 4 years prior to the pandemic lockdowns, interest rates were dropping. Yeah. So if you had bought a property 6, 7 years ago, all you would have seen is your interest rate coming down. We get to the pandemic and they're set to just about zero, which is emergency settings because nobody knew what was going to happen with the pandemic. So you're sitting there at 2% and you're thinking life's pretty cool, right? And now it's only now in the last 18 months where a lot of people who bought property 6, 7 years ago are seeing interest rates return to some sort of normal. So they're not high, they're just returning to normal. Now, you could probably make the case to say they've probably overshot a little bit. And I think even the RBA, in their more reflective moments, would probably agree that they have, which is why they've started talking about, we're going to start adjusting down. And that's fair enough, right? No one's perfect. But this, where we are now, is probably the higher end of normal for Australia. Yeah, but it is the first time that a lot of people who have bought property in the last sort of 6 or 7 or 8 years have seen an interest rate increase. So it's a bit of a shock to the system. But as you said, people adjust, right? People don't give up on their home. They go, well, we'll do whatever we need to do to make sure that the family's safe and we keep the roof over our heads. And that's exactly what they've done.
That's good. Real good.
The interest rates, it's fascinating because we have people make a decision not to proceed with a new home on the back of, I just want to wait and see what happens with the interest rates. Fair enough. But there's actually in our industry at the moment, there's some significant changes coming, and they're coming very quickly around 7-star energy rating and livable housing and, substantial costs, anywhere from 15 to 30K on a normal home. Even on bigger doubles and stuff, it'll be substantially more than that. Would it be fair to say that because I think that hesitation is a little misguided. I find that some of our clients get advice around just hold from mum, dad, auntie, uncle, these sort of people when they don't actually understand our industry. And the reality is if they actually hold, they're going to be hit with 20, 30 grand of additional costs today. Whereas if they got in now, they wouldn't be. And I'm only talking the next 4 weeks at the time of recording this, pretty much is what's left. But would that be, what sort of impact does the current interest rates have in that dollar value over that course of time? Does it make sense what I'm asking there?
It does.
Yeah.
And to the point you made about, they go to a family gathering, whether it's a barbecue or lunch, dinner, whatever, and you've got someone saying, you're better off holding off. The best advice I ever had in my life was the best time to buy a property was yesterday.
Yeah.
Right? That was the best advice I've ever had because it's been true for the last 30 odd years of my life. If I've waited, I've paid more. If I've waited, I've missed out. Whereas if you buy today and hold, so the idea of property is that you buy it, you don't flip it in 12 months, you keep it for a decade. You keep it for a decade and a half or 2 decades. And that's when you get the true value. So whether you buy it, so waiting 6 months because you think things will get better, the reality is, if the experts can't predict what the next 6 months are going to look like, you and I have got no hope of getting it right, getting that prediction right. Off the back of that, the best time to go is now, because the reality is, particularly in our industry, If you buy today, you're almost guaranteed to buy cheaper than you will in 6 months or 12 months. And Colin, to the point you made earlier about the changes coming up to the housing or the building regs, the fact of the matter is that building a home, while it's more expensive now than it was 3 years ago, will become even more expensive again. So locking in a set of rules around the construction of your home today will be significantly cheaper than waiting till tomorrow. And that's irrespective of what happens to interest rates. Interest rates become irrelevant in that context.
Yeah.
And like Steve, as some of these interest rates came through, like I think I worked out at one point there, for most people, it was sort of a few $100 extra over a period of time, if that makes sense. It wasn't, the interest rate rise wasn't costing you thousands of dollars up front, and more likely they're going to come down now, right? So you might have been up a bit, 50, 60 bucks a month, whatever, and if they're 50 bucks a month, 12 months is $600. Like, it's not a lot of extra money. Could you find $600 to make it work? You're saying hopefully interest rates will come down September. That's 6 months' time. We're talking about it $50 more right now, and then the interest rate comes down. You're talking about $300. It's not.
I think, Darren, that relates more to the confidence that people feel around making the decision to move forward. What a lot of people don't understand is that when a home loan application is assessed, it's not assessed at the current rate. There's a thing called the assessment rate. So lenders will artificially inflate the rate that they assess your application at. And they have to do this by law. So it's not because they want to. The law says they've got to do this. So they assess your application at the assessment rate. The whole point of that is it builds in a buffer for worst case. So if interest rates get to the 9 or 9.5% that your application is assessed at, can the average person, or can you in your circumstances, your particular circumstances, afford the home loan that you're applying for?
Yeah.
Off the back of that, given that lenders are automatically building in these quite significant buffers, that alone should give people the confidence to proceed. Because if you're qualifying at 9.5, you're going to romp it in at 6.5 or less. Yeah? You'll do it without even breaking into a sweat. Yeah. And I think not enough people understand that that's actually part of an integral part of the assessment process. So it's not a case of, can you afford it today? It's actually a case of, if we jack rates up to some unrealistic level, can you still afford it? And if the answer is yes, they'll approve you. So there's that automatic protection built in for applicants with every application.
Yep, that's common. That's one of the main objectives we have to, objections we have to overcome, and education pieces we have to deliver, is that you're not talking about, if someone's going to give you $5, they're actually making sure that you can afford to pay back 10 before 100%. They approve the $5.
Absolutely.
That's what's actually happening. So if they force you to pay back $7.50, great. You've got approval for 10. Like, that's what people are missing. It's, so if you can get a broker, as we wrap this up, if you can get a broker to give you a green light, whether it's on titled land today and for a package that you looked at, or untitled in 6 or 12 months because you've got a bit more saving to go, the conclusion is simple. Go and get it, because you're not risking it 4 point whatever percent, because you're actually being approved on a much higher percentage than that. So you got nothing to be in fear of. Your broker will give you that advice, obviously. So, really good point, Steve, and Daz too. So just to wrap this up, I want to say thank you, Steve, because you obviously such an expert in this field, and the way you deliver the message across and explain everything so clearly. Thank you very much. It was excellent to have you on board. If anyone has any questions, you can, of course, jump onto the website, homebuildinghub.com.au, send us a question, and, of course, leave us a 5-star review, because hopefully you got some great value out of this. Steve, can you tell us where people can find your business?
If you just do a Google search for Loan Gallery Finance or Loan Gallery, this ugly face, generally speaking, will come up. Don't be dissuaded by that. We do have a team who are quite energetic and motivated. So just do a Google search for Loan Gallery, you'll find us easily enough. And we have it.
One throughout the back, mate. Hey?
I'm pretty sure people watch our YouTube one rather than listen on the podcast, as because of our handsome looks.
That's exactly what I'm saying.
That's the feedback I'm hearing.
Yeah, indeed.
Yeah, might have made it up, but that's
Can I just thank you both for the opportunity? It's been wonderful chatting with you this morning. This sort of thing is new for me, but I'm loving it. You've made me feel very welcome. Thank you very much.
No, you've done very well. Done very well, Steve. Thank you. So thanks, guys, for watching or for listening. Please jump on, leave the 5-star review, and jump on and see Google Loan Gallery, because those guys will look after you. They know what they're doing. And other than that, thanks again. We will see you on the next one. See you guys.
Thanks for listening to the podcast, guys. And just our disclaimer, whilst we're all about providing value to you, this podcast should not be considered as legal or financial advice. It contains general information only, and you should seek out independent professional advice on your personal situation before making any legal or financial decisions.
1,